Something that's talked about a lot in the Canadian news is the inflation levels. And I get it, because not only does inflation directly impact consumers' everyday spending, but it's also something that the Bank of Canada looks at to determine whether they're going to increase or decrease their overnight interest rate. And that overnight rate directly impacts variable mortgage rates in Canada. And something that's not looked at as much, but I think should be in the news, is Canadian bond yields. And in case you didn't know, Canadian bond yields directly impact fixed mortgage rates in Canada. And with more Canadians opting to choose fixed mortgage rates because of the volatility that we've seen in variable rates over the last couple of years, I think it's more important now than ever to focus on what's happening with these bond yields in Canada. So this week I came across an article that I wanted to share with all of you, and it reads, Canadian real estate prices may hit a roadblock as bonds surge. And the article is by Better Dwelling, which is an independent news outlet in Canada that covers the housing sector. And there's just a couple of key points I want to take away from the article for you. And the first is a little bit of a summary of what's going on right now with bond yields. So it says, Canadian 5-year government bond yields are surging higher. It goes on to say Canadian government bond yields bounce back rapidly. The Government of Canada 5-year bond yield, it closed at 3.579% last week, rising 27.13 basis points over 5 trading days, which is an unbelievably rapid climb higher. Now, just to visualize this change and see where bond yields are compared to a couple months ago, I want to look at a chart here, which is Canada's 5-year bond yield over the last 12 months. And you can see earlier in about early March to mid-March this year, we saw bond yields fall from just over 3.5% down to sub 3%. And they remained around 3% for a good 2 months. Now, like the article talks about, in the recent couple of weeks, we've seen the bond yields surge very quickly, jumping to 3.6%. And as of today, May 30th, sitting around 3.5%. So the next point the article makes is talking a little bit about what's been happening earlier this year when bond yields were lower. And it says falling bond yields helped to boost home prices recently. So basically, when bond yields are lower, so are fixed mortgage rates in Canada. So Canadians can afford a little more when they're shopping for homes, and in turn, it helps boost home prices in Canada. And that's what we saw earlier this year when fixed rates were a little lower because of bond yields. And because of the supply and demand issues we've seen home prices increase month over month, every month so far this year. Now, the next point they're talking about is what's happening now that bond yields are starting to increase. And it says Canadian real estate may see yields knock the wind out of its sail. It says that's why the recent reversal of bond yields is worth paying attention to. And like I mentioned earlier, we pay a lot of attention to inflation and variable rates, but we should also be paying attention to when bond yields are reversing or surging, because it's going to directly impact fixed mortgage rates, which is also going to impact home prices in Canada. And finally, there's a good summary tweet by Ron Butler, who's a mortgage agent in Canada, and it reads, bond yields are soaring. Get ready for fixed rates to rise next week. Get your applications in today. Get your pre-approvals locked. Fixed rate mortgages going up. It says by the end of next week, all of the 4.65 3-year fixed and 4.39 5-year fixed are gone. And he actually goes on in another tweet to say that these discounted fixed rates are likely going to be 5% or higher as a result of the increasing bond yields. So just a couple of key takeaways. We can see that bond yields have increased, and in turn, fixed mortgage rates in Canada are also on the rise. And on the flip side, we actually saw inflation unexpectedly increase last month, and we released a video about that a couple weeks ago. So the Bank of Canada is keeping a close eye on inflation to see what they should do with their variable mortgage rates. So even though we've seen price growth every single month in the GTA this year, we're in a little bit of a volatile situation when it comes to mortgage interest rates.